Welcome to the Startup Grind.
Oh, that's great. Here's your beer. Just in case you need the water, you have the water there as well.
Just because I'm nervous, so I need some beer to help out.
Right. And I actually need to put this kind of back to this so that we can actually have more of a quiet chat without the without the thing blasting in the background. So thank you, Beijing, for coming here. Now, who knows? Most of you actually signed up because we have an awesome speaker here today. But Beijing, please, take a moment to actually introduce yourself. That would be great.
Hi everyone, my name is Beji Yang. I'm managing partner at 500 Startups. We are early stage Seedfun and also Accelerator. In the Bay Area originally we started, but also we're expanding around the world. I joined the firm now for years, and I manage a lot of international sort of operations. So it's been a really great journey.
Great. Well, I'm gonna actually dig into every one of them, right? So let's actually, before we get into even 500 startups, how did you actually get to 500 startups? So let's kind of talk about your journey into the entrepreneurial world and also into the 500 startups.
So I look sort of Korean, Chinese, Asian, but I'm actually Brazilian. And I moved to the story is like I moved to the Bay Area. I was an outsider, but the last 5 years I was really able to get into the tech ecosystem, and the way that I got into the environment was because I was really active working with the local ecosystem. So a lot of like what you do with Startup Grind to put the community together, I was doing that in Brazil. So I built an organization called Brazil Innovators, and we do a lot of program and training for founders. And what happened with a lot of initiatives I was doing, I just like start meeting really, really amazing people who I said, these people, like a lot of Brazilians who I was talking to, I just felt like they were isolated from the mentorship, from the resources we had in the Bay Area. And I said, you know what, I'm going to just start helping sort of reach. So I start like talking to investors, say, oh, you're interested in Brazil or potentially this market. This is this awesome investors. This awesome company, and what happened was a lot of investors were interested and on those companies, and they started making me the offer to become, at the beginning, sort of as a venture partner, and eventually I joined 500 because of my network to founders. So I do think that the work to work with the tech ecosystem, especially in a place where venture is not very developed, actually is the best way to get into the tech.
Okay, so I think many of you probably know 500 startups, but let's just, so I think people would probably know, but they might actually be good to just do a quick background on 500 startup before I dig into more details about your background.
Okay, actually, I'm curious from the audience, can you do a quick raise of hand who is familiar with 500 startups? Okay, so maybe half, sorry, I'm not seeing everyone, like maybe half of the audience know what 500 Startups is, right? Like, can you do it again? Okay, that's cool. So sort of on the background is we are a seed fund, we manage 130 million, the main fund, but also we started doing local funds, and actually one of our big initiative is to invest more in Korea, and that's led by our partner here called Tim Che. And we do have the main fund that today we do investments of a check size of, the first check normally is 100,000, and then we do a lot of follow-on checks after we deploy the first investment. What we do differently for a lot of funds that are out there is that actually our investment strategy that we believe is to do a lot of investments, a lot of what we call small bets, but when it's working, then we double down. Because what we saw in terms of big shift in the market is that it's a lot cheaper today to build companies, and it's a lot cheaper to distribute those products too. So a lot of the power has shifted from the investors actually to the founders. So with that, what's going on is that with most of the time you have 3, 4, 5 like really good founders, they can build product really quickly, and with 50,000, 100,000, they get to like go to the market really quickly. And when it's working, like we don't wait for the real traction to happen. We want to invest in you before the traction, and then when your company is working, we want to put more money in. So that's our general thesis. And in terms of scaling, like the number that we have, we actually invested in 1,000 companies. So it's quite different from a lot of ventures that you would probably see in different parts of the world.
Wow. So how many of the 1,000 are actually, so out of the 1,000, it's supposed to be 500 startups,
5,000
right?
companies.
So if it's 500 startups, I'm assuming that maybe you were thinking that when you started, you're gonna invest in 500, and you're probably already way beyond that then.
So it's funny because for a really long time, people always ask us like, why 500 startups? Are you like aiming for 500 startups? That's such a crazy number. And I joined when we were like only 7 people and probably like have 20 companies in the portfolio, and then 500 did look far, but the name of 500 actually came from the founding partner, Dave McClure, and he really liked the blog, The Cat and the Hat, and for a long time he wrote a very prominent blog called 500 Hat, and that sort of transitioned from 500 Hat to 500 startups. It wasn't a goal to invest in 500 startups, but what has happened, which is really interesting, like when we started, it felt that 500 would sound like a crazy number. Today, when we are at 1,000 and like investing at a very fast pace in really good companies, it doesn't feel that crazy anymore. What we want to make sure is how do we provide like the great resource for the founders that join us, and we, of course, once we started investing in more companies with a lot of mentorship, is that we are creating like a certain scalability, which for us, and the network effect for us is really important.
So how do you actually support 1,000 companies? I mean, I'm not really entirely sure how many people you have managing the portfolio of 1,000 companies. So how does that happen? What kind of assistance or kind of guidance do you give your startups?
So sort of compared to a lot of funds, like a lot of funds, they will have like one partner take like board seat, and maybe like one partner will have 7 to 10 companies, and that's it. Our model is different. We have 50 people in the team, and actually we are constantly thinking like, what do the founder need, and what are the specific resources we need to build for that. And for instance, it's not so much like whether Veggie or team, like how can we help specifically 1,000 companies, because it's never enough, right? But we have, for instance, like 300 mentors that are specialized in a huge variety of areas that they could help the company. So for us, it's thinking, how do we create a platform that companies can access, and we know people who can help you. So that's sort of one component of it. And the second piece that is really important and we have evolved to do a lot more, and you'll see 500 startups doing continue to double down on that strategy, is one thing that we learned that we do really well. It's online marketing, which is basically, some people call it like growth hacking, online distribution. If you have a product, how do you get that product to the customer? How do you get that product to the clients, right? So we start building internally like experts. So for instance, if you join 500 startups in the Accelerator program, we have right now 6 people in the distro. We call distro team, is basically like online distribution team, to help the companies grow. So we know that there are certain areas that are important for founders, and we build specific expertise for that. And those, like right now, what we're doing like more and more is online distribution. And we know, for instance, like other important areas will be like helping companies exit. So we're looking at how do we build, for instance, like team that can help companies do M&A and continue to do that. So for instance, team is leading the initiative to do Corp Dev Summit in end of this year, because that's a very important part. So for us, it's a lot more important to gather like the 10 best buyers that are in the Silicon Valley to come here. We feel like that's a lot more valuable than to say, oh, how one partner can help like 10 companies. Like we want to be able to really scale our operation, and we're constantly paying attention, like what's important and how do we scale that in terms of platform.
So you mentioned that you're growing globally right now, and you're helping your experience in Brazil and getting kind of linked up with all the startups and the ecosystem in Brazil helped you with your career path. So when you're actually growing internationally, how do you kind of anticipate that model to work in Korea or elsewhere? And that might be good to understand as well.
Yeah, well, the one thing I think also it's important to understand the culture of what we do is that we don't, like a lot of people look at us like, oh, what's the model we should replicate? Actually, we're learning with, the culture is, let's move fast and let's learn of like what's working. So what we ended up doing, for just answering specifically to your question, is we started doing the main fund, and we saw a lot of opportunities and requests to do more like the regional sort of requests. That came from because the investors wanted to see, the investors of our fund wanted to see like a little bit like more focus of the money sort of flowing into the market or like specific area. So we start testing, like we raised a very successful in terms of fundraising, like a very successful Southeast Asia fund that's called 500 Durian, and then we raised another fund which is not geography, it's actually area. It's mobile collective, like Edith runs that, and then that seems to be working really well. And team now is leading the 500 Kimchi, which is the fund here focused in Korea. So a lot of it for us, it's sort of, we've been learning with the process, and it's been like really amazing to see like, okay, one model worked, and then we've been like sort of replicating that. And it doesn't mean like we'll keep just for that. I think the key thing for people who, and I might be going a little bit too much into details of how venture work, is that venture capital, like even in the US, you don't really see a lot of innovation, right? So like someone would raise money with like LP or investors, and then, okay, this is like, I'm gonna invest like $1 million into 10 companies. And that's pretty much it. What we are driving is that there's so much innovation into the market. Like, how do we use the capital to really capture that instead of waiting for the innovation to happen, because everything is happening at a much faster pace and it's going to be exponential. So what we are pushing is that not just the mentality, but also make sure like the capital and the structure sort of follow through that. And how do we have the model? Like we're still sort of learning with all the changes that the market is sort of showing.
Then do you have to be invested by 500 startups? Or to get into the acceleration program, or is that completely separate?
So you do have to, like, the accelerator we run, we give you capital. So all the companies that come through 500, it's also like invested. We don't have like a model that like you do like on the side. What we do is like very often, if you're a company that wants to, like the one thing that I think we've done really well, and we want to continue doing like global market. Like I first started doing like Portuguese speaking companies, and then we help a lot of companies become really successful like in the US by just providing the whole platform, right? And at the same time, the other thing for us that is important is for the partners to look into the local market and understand like what are the opportunities for local market and sort of invest. And very often, which is really important, how do we co-invest with like a lot of other investors to make sure you're building like the next generation of successful founders. Because venture for us, and even like for you guys that are building startups, it takes time, right? It's not like you're gonna start doing something and it's overnight that you're gonna see success.
So then does that mean that, to be a part of the acceleration program, then that means that you
You get money from us. You
Right.
definitely get money from
But
us.
do you also get money besides actually, would you actually get investments without actually having to be in the program as well?
Yeah, you can get like in our case, I would say 40% of the companies go through Accelerator, and then 60% it's just seed investment directly in outside market, and that might range sort of market to market, partner to partner. But we do provide both. You get to spend 4 months with us, either in Mountain View, in San Francisco. We actually have a Mexico operation too for who wants to sort of scale for Latin America. And then, but if you decide not to use that, you can get some capital from us to like for your seed round, or we normally like to start investing on the seed round.
So if you're just getting the investments for you said 60% or 40%,
Yeah.
right? And if you're actually getting just the seed funding, is that specifically for that, startup for that particular market, or do you have to have a startup that's actually kind of facing not just the domestic market, but have the vision or the kind of the
So the question is, do I have to be global to be
Right,
able to get the seed? No, you don't have to go to the Valley, or you don't have to be global. What we are targeting is whether you're in a relevant market. So, for instance, if Korea can lead the way how mobile is going to be used in the future, and that is going to be a big market, that's relevant enough. If a Chinese market has enough, like Chinese speaking, is like Spanish speaking have like 500 million Spanish native speakers, that's like big enough market for us to invest without us looking like internally, oh, you have to be in the Valley, you have to be in the US. So we think like the true global strategy is that you're able to understand the opportunities globally and take a lot of the resources between knowledge and mentorship and take it globally. I think that the real transfer is on the mindset, and then it's also the ability to really see what the opportunities in different markets are.
And so when you actually kind of start evaluating different startups, what are the typical areas that you're looking into nowadays? Right, because the things are actually changing over time. Are there particular areas that you're looking into?
Companies, it's like everything could be part of our investment strategy. Things that are really important for us is that because our first check is at around 100,000. It's quite important that the company is capital efficient, because like if you have to build like a factory, maybe like that's not so much into our thesis. And then the other thing that I would encourage founders to think about when you want to approach 500 in terms of investments, we're very like metrics oriented organization. So we will be asking, okay, you might not have a million users, but can you tell me from the product we already launched, like what is the unit economics? Like what's the cost of acquisition? Like how long would that customer stay with you? Like then can you run the lifetime value, even if it's like early assumption on that? And a lot of what we develop and we believe that we can help, and that sort of ties into like a little bit, you ask like how do we help companies before, is that with the online distribution you have like early like assumption of how your product is going to be delivered in those markets. Then we'll have like experts that could help you sort of deliver and put like a megaphone so that you can deliver your product to a much larger audience.
So you mentioned a few times about like you're helping, you have a team helping the entrepreneurs to grow their companies. Can you give us some examples of what those success cases were?
Yeah, we have, for instance, actually we recently launched, we were talking about like different funds, that's more like an allocation, like we launched like a distro fund, right? And on the distro fund, like on the expert team, actually we have like experts that work a lot with Google Ads, with or like Facebook ads, like delivery on like SaaS business, like how do you find like customer and then sort of repeat that, like what are the metrics that are important. So we have like some companies that sort of use that specific service, and what we're helping do is sort of bridge that. And to be really specific, like companies that do well on the portfolio that I've seen and then they took a lot of advantage, it's like Talkdesk. It's a Portuguese founders. They came to the Bay Area. The tagline is set up your call center in 5 minutes. And today, like we started, like when we started investing, they were all the companies when they joined 500, they're between like normally at around 1 million. It used to be a 1 million, that's 1.5 million in terms of valuation. Now they're definitely like above 100 million. And I know like a lot of they were able to achieve was because of the Accelerator program that was able to help them set up a lot of the connection and a lot of the network into the US market. So that would be like a case to look at.
So, and then in terms of, those are particular companies that you were able to kind of scale up in terms of online expansion. Do you also help them with offline as well then? Because I mean, a lot of these companies, if you actually think about a startup, I mean, you may be thinking about online first because of the cost effectiveness, but at the end of the day, if you actually meet a certain search saturation on the online, you might have to think about offline as well. Then how do you kind of guide startups from that perspective?
So yes and no. I think like in the US, it feels like, at least in the Bay Area, like I think everything is quite connected to online, and the opportunity is so big that I think it's where the low-hanging fruit is. And I can say like really specifically for Brazil and a lot of emerging economy, and I don't know how that fits into the specifically to the Korean market. It's for instance like a lot of businesses in Brazil, they're not online. So you assume that you like launch a SaaS product and it's self-service. That's not into the culture. That's not into the culture like I'll go online, find something like an accounting product, buy, download, pay for it, and then start using, right? So you need to, like founders, and then we work a lot with founders trying to create like, what are some of the things that you could create that could help you become more scalable? Because I think the driving word is not whether you're online or offline. The driving word is, do you have a channel that's scalable or not? And of course, if it's online, then it's sort of easy to do that. But a lot of market needs to mature to the point where it is. So that's a lot of the beauty. And on like the first question and the second question, like the question you were asking, like, oh, do we have a specific area? The beauty of it is actually we have experts in the 500 team, like invest team, that will have like be thinking about like different market, right? So I'll be a really good expert of like Brazilian and a lot of emerging economy. Team would really understand about the Korean context, and it's very hard for like I know we do a lot of sharing. I think that's the beauty of it, right? Like you have like a strong invest team that could do like enough sort of pattern recognition, so that will say, okay, so maybe like to invest specifically in Korea that is related to mobile, like how does that connect to a lot of things that I'm seeing in Brazil, and that will do like a lot of information sharing, and I think that sort of build a lot of knowledge for what we're doing, and so that's a lot of the beauty of the model that we are running, is that you can bring a lot of different experts in different areas, and we have a foundation of a thesis of type of companies we like, but we are able to become experts in different markets, and that's sort of the way we really scale what we're doing.
So basically, if I understand you correctly, if you have a scalable business, and it doesn't have to be whether it's like global or not, if you find opportunities that are actually sizable enough, whether it's domestic or global, then
if you can become $1 billion company, we love you.
Right.
Although what you do really well is online. So I would say the majority of the time, things that you see us doing is online.
Okay. So I guess I have about 5 or 10 more minutes. Okay. I have about 5 more minutes, and I'd like to at least you've seen about 1,000 companies so far, and where entrepreneurs are kind of innately more optimistic about a lot of their businesses. What are the typical kind of things that you see in entrepreneurs that across the globe that you would want to caution or help people understand and help them kind of get past these types of core top like 3 problems?
So I'm trying to. The question is, from all the founders, what are like the top 3 things that it's important for them to get funding? Is that the question, or?
Or I mean, I'm actually asking more of a general question. Where if you're looking at all the different founders, what are the top 3 mistakes that they typically make that you want to caution against?
When I'm taking a decision, when I'm like making a decision whether I'm going to invest or not.
Right.
So the first thing for me that is really important is team dynamic. But of course, like every investor at 500 will have their own list of things they'll look at. So if you come and pitch me, I would say, hey, show me your team, and then I normally like to talk to multiple sort of team members. I think one thing that is really interesting when you are pitching an investor, and we see that a lot at 500, right? Like someone, and that's maybe like different when you're pitching on stage or you're pitching one-on-one with your investor. Sometimes you have someone pitching on stage, and everyone's wearing the same T-shirt of like the Startup Grind T-shirt. But then I go and ask her, and it's like, hey, tell me about Startup Grind. And she's like, oh, sorry, I'm not really sure. I'm not doing the fundraising. I'm like, oh, okay. So first of all, you have to make sure like the team dynamic is like really aligned. And that's the first thing I want to make sure that it's really strong, because at early stage, what is going to really make it or break it is the team more than the individual or the idea or anything else. So that's one thing. The second thing that's really important for founders and mistake is like, do your sort of homework. I think there are so many different investors, and investors are looking at very different sort of components. So do your homework. Like maybe and that's not 500 startup. Like maybe like Beji has her list of things that is important for her, and she has a very like specific thesis. And it's not whether your company is good or not. It's whether that investor has a really good fit for you. Because the worst thing you want is, for instance, you want to grow your company at a really fast pace, and then you get a very conservative investor. You get the cash, but your investor has this very different vision to it. So I think the second sort of mistake, like first like the team sort of integration, and the second is like you don't do enough research to understand like who your investor is. And it's not whether you're gonna raise money. The problem is like if you raise money with like the wrong investor. And the third is really being able to like be really prepared. One thing that I'll give, like, and I don't think so much it's as a mistake, but as a tip to founder, is that, like once you're doing your pitch with the investor, what's the difference between, good question and a great question? Well, someone wants to try that. What's the difference between a good question and a great question?
See, this is no questions.
Okay, this is no question. Okay, why don't you try? What's the difference, so that we're here interacting, what's the difference between a good question and a great question? There's no wrong answer.
Well, I'm getting put on the spot pretty often these days. I got put on the spot last month too.
Good job.
Okay, so great question is something about, to an investor. Something... I would like to. I've been getting put on the spot a lot.
From a lawyer standpoint, a great question is one you already know the answer to, or something that.
Exactly. So he's thinking about like the good question. He's thinking about what the answer is. But for the great question, you already have it. So one thing for you to think about is think about it, have enough slides. And if I ask you like, what's the difference between a great question and a good question? It's like, let me show you slide 7. And then you have this like, that's a great question, but I have the answer for it. So I think more than whether that's a mistake or not, it's just like, be prepared for just like people will have a lot of different ones. Just play different scenarios in terms of fundraising. And those are like a lot of it, it's specifically to tips to fundraising. And one thing I want to just emphasize, it doesn't mean like if your startup raised 10 million, that's going to become successful. So that's just like sort of a component for, like, a lot of people think like fundraising is part of it, and it's a success factor. So it's like, oh, congrats, you raised money. No, congrats, like if you sold the company or if you have customer. I think that's the real congratulations. So I think that some of the tips I know is really specific to fundraising, but I would say like those would be like the 3 things in terms of like tips I would give to founders, and all of them are really related to like be really prepared either for your team, for yourself, or for who you're pitching to.
Right. So for those of you who actually haven't heard, the answer to what is a great question versus what is a good question, a great question is the one that you already have the answer to. So that you can actually point back and say, hey, great question, and therefore go to slide number 7. We already have the answer for that, right?
Then the investor will love you. It's like, oh, you're so smart.
No wonder all my investors love me for some reason. That was it. Right. So I'm actually, people who know me are on the stage probably laughing at me, but that's okay. All right. So I'm gonna actually go into Q&A. So I want to then get somebody to take this. Where is our? Yeah, there you go. Oh, thank you, Bridget. So any questions? We wanted to kind of go into questions from the crowd. No question is stupid. Stupid question. Just any question.
Some are great and some are not.
That's right.
Hello. First of all, thank you for your insights and the talk. My name is Eddie. I am an aspiring entrepreneur. My question to you is, for somebody who is new to the entrepreneurial game and founding a startup, what advice do you have for founders who feel like they have a strong grasp of how to grow their user base, but not a strong grasp of a monetization process or quote unquote how to make money?
So the question is, how do I evaluate companies that know how to grow the company but not necessarily have a business model behind that? Is that the question?
Well, grow a user base.
It's good to grow user base, but not necessarily. So at 500, we are a little bit like going back to your previous like what we're talking about. Like some investors don't care so much about monetization. At 500, we do care about monetization. Although we have seen enough companies that very often like some monetization become obvious for us after time. Like maybe founder can see it, but we start seeing like very different, like various business models that we could apply based on our experience. But we like to see companies not only with great user growth, but we want to know what the founder knows how they can test monetization. You don't have to have monetization right away, but I want you to start thinking from very early on how like you're gonna make money, because we feel like that's important part of the equation.
There's a question.
Hi, my name is Dan. Me and my co-founder are currently working on language education apps for kids. And kind of piggybacking off of his question, assuming we have a monetization model and a model for growing a user base, what advice would you give to a startup that's stuck in the vicious cycle of we need funding to get customers, but we also need customers to get funding? As in, like, accelerators want us to have customers before investing, but we can't further develop our product without receiving investments.
So one thing that we like to see, how do you hack that? It depends on the founding team very often. Like maybe like recruit some. It starts with a team, right? Like maybe like you can find like someone who can build the product as you're part of your founding team, or say, hey, once we have like the funding, we can like give you some equity. Like one thing that you have a lot. As a startup, it's equity. You might not have a lot of cash, but a lot of your job as founder is build the vision for others to join. So I think first thing is sort of find the founding team that can help you build the product. In terms of sort of growing user base, what you need to do, it's not like you spend like 100,000 or like 20,000 on online marketing that's paid. What you want to make sure is you test some of the format to say, hey, I understand what's the cost for instance, like for education, right? Like for your education space, like what are the keywords that I'm going to like invest? Is it more efficient maybe like in Facebook ads, or is it more efficient like if I maybe go to like if it's related to app, like how do I sort of make sure to talk to like some bloggers to make sure that that becomes relevant? So what you want to do on the early stage, it's first be able to have the vision to have like the core team who can sort of hack the product at the beginning. That's the first thing. And the second, you need some cash. And I don't think it's a huge amount because it's not like investing in growth. What we are asking you to do is to just have some assumption from all your distribution channel, like what have you tested and where do you see the big opportunities, and you give us like, you know, like I know the user acquisition cost is this, and if we put more money into that, we know that the user is going to grow, but we know also we can monetize on top of that. So it's just finding like what would be like a first, because the problem is like it's a chicken or the egg. It's just like try to find at least like a little bit of foundation on the product and like early testing of like different channels without having to put too much money in. Other questions?
I'll ask a question. I'm actually curious, looking at the mobile reality that you see in Korea and so this hyper-connectedness, and especially with your background in emerging markets, knowing that it's a very mobile-first reality, what would be your recommendation, or what would you say to these founders as thinking about emerging markets? You know, a very mobile-first reality moving forward. What are some of the advice you would say to going into Brazil or going into the Chinas or Indias of the world in building their product, and considerations that they might not be thinking in a very hyper-connected space where their phones work extremely well?
So I think the key thing is user. It's do a lot of understanding of what your user is looking for, right? And it's really crazy because if you're in a hyper-connected place, it's very hard for you to think like, I'm not online with a broadband all the time, and if you deliver some product, sometimes your product will have like an image. But if you are going to, let's say you see, like a lot of people talk about India, so it's not that far from here, and you say, I have this product, I want to go there, you need to do a lot of customer development, because what happens at the end is your brain is used to, I can put an image, and that image is going to load, and people can see that all the time. But once you're in India, it's so not true. Like, do not have that image. How the user interface is going to load and how people is going to interact is going to be completely different. So the way to sort of crack that is to just work a lot with the user. I don't know if I'm actually curious. Like, have you guys heard about like design thinking, sort of user-centered design? Like, just a quick raise of hand. Get it? So for those who doesn't like have never heard of that, I think that's like a practice that it's useful for you to look at. Like Stanford has a resource called D-School, and a lot of that is centered to how do you design something based on user, and that's how I would crack the market. I think the key assumption is broadband is really expensive, more than whether you have a feature phone or not. It's just like you don't have that luxury for data all the time.
My phone works better here than San Francisco, so.
Oh yeah, this is why like I felt like this is where the future Asia, my theory, and it's not theory because it's true, is Asia is always in the future. Like when the times are like if you fly from Korea back to San Francisco, you go back in time. So this is where future is, and that's how like people connect the phone.
That's right. Yeah. So. Any questions? Oh, okay.
Hi, this is Paul. It was great to listen to your speech. It was really helpful. Recently, I heard that you guys invested a company here in Korea,
Yes.
Kono. And is there any other plans you have in Korea or Japan or China, in Asia perspective?
We have a lot of plans. The plan for 500 is to conquer the world.
I was trying to avoid this question too.
So in Korea, we actually have 8 companies that we invested in, and Team.
Where's Tim?
Wave.
Tim, Wave. There you go.
So Tim actually has the master plan for Korea. He's the partner and leading like all initiatives here. He's raising the fund on $15 million, and that means like we're gonna be really, really actively investing specifically in Korean founders in Korea market and like the whole sort of larger component that is related here. For Asia, we actually have a partner. We have a fund. It's called 500 Durian. That's in Southeast Asia. We're launching a tuk-tuk fund, which is in Thailand, and we also have partners in China and India. So our sort of global strategy, the true global strategy that we are running, is that we'll be able to have the experts in the market, and they'll be independently sort of expanding, and then working on like fund 1, fund 2, fund 3, and then they can like just invest in all those sort of great founders in the market. And one thing that we're doing, sort of that's a plug in to a lot of what I ended up doing at 500. Like I know, like long term for a lot of what we're doing internationally is to be able to work with other co-investors. So we actually launched just recently a training program for investors. It's in partnership with Stanford, so that we could sort of make sure we're working with a lot of other investors. And of course, that's always like good recruiting for us, for people who want to set up funds in the long term. So right now we have 17 people in the invest team, and we definitely will continue to expand. And we are lucky to have a really good partner for Korea, so we don't have to worry too much about it. We normally, like when international, you have to only worry until you find the right person. Once you find the right person, you're like, oh, my work is done.
There you go. All right. I actually had a question, but I wanted to leave it to the crowd. Since we have just a little bit of time, I wanted to ask you this question. You know, a lot of Korean companies, they're now focused on growth, and they're continuing to grow. But then at the end of the day, you know, we have to have some sort of an exit strategy. And once it goes beyond a certain size, I mean, the Korean companies may be harder to purchase these other kind of massively growing, hyper-growth companies. How do you actually see that changing in the future in this area, especially in Korea as well as the rest of Asia?
So I think there are 2 things you can work around that. One is, and those the questions more on like liquidity exit for founders, right? One is work actively with sort of the legal structure for the IPO. Like for instance, you can IPO in the Japanese market for a lot like smaller revenue, right? Like if I have like $10 million, you can IPO in the Japanese market. So very often you can work on like secondary market, and very often like VCs develop to do that too. So I think there are a lot of structural things that you could do. Just to think more about like the public market, and I do think that that is a real change in the long term. For instance, just in the US, and I think that is going to influence the rest of the world, is that more and more you can have investors. Like before, you need like people to be accredited investor to do something and invest. But now, like with all the sort of legislation change with the Job Acts in the US, you don't need to be accredited investor. You can like ask people like to invest in your company, so that changes the structure of investments. Like individuals can like be actively either investing in companies, and then you can think about like the liquidity of that. So that's sort of one portion of the equation. The second portion of the equation, it's what you brought it up, which is the assumption that the exit are all going to be through M&A, which I think it's probably true if all the market remains the same. I think one way to do around that, which the Korean team is already doing, is to make sure you bring, because buying companies and buying innovation, it's something that it's not often embedded into large companies' sort of mentality. Very often, large companies say, "I can build that. I don't need a startup to do it." But before they notice, their business is disrupted. So a culture in the valley is so much cheaper for us to acquire, and we will never be able to hire those talent than to do that. So you have like acquisition from 5 to 10 million just to buy the team, from maybe like 10 to 50 million, like it's a product someone can build, maybe like over 50 million, like you're buying the market, and you have that very, very vibrant. What you want to do is take that mentality to come to Asia, to take that mentality to come to Korea. So a lot of initiatives that we plan to do at 500 is to be able to bridge that change of mentality and talk a lot with traditional industry to say, you know what, like, it's not gonna take long before your business is disrupted. So you should start like going out shopping, because that's going to be a lot better for your business long term.
Well, there are no more questions? Oh, okay. Last question.
You should just stand up and yell. It's quite far from the mic.
I will repeat.
Since this is the last question, you get my mic.
I'm Will, and I'm a student who is about to graduate. And I have a question about target market. Let's say I have a business item, like which will be so awesome and amazing. And looks like my target market is in San Francisco, let's just say that. But I'm in Seoul, here in South Korea. In that case, some people say that if you want to do some business in San Francisco, you have to move to San Francisco and you have to feel every environment in there. But other people say that this is connected world, you can just work online and you can just see some information on the online. So definitely there are pros and cons in both sides. But what is your point of view in that question?
So my answer, actually I'm going to ask you back, is for that great idea and product that you have, what is going to be the fastest way for you to deliver that to your market? It might be one, if you are in the Bay Area, you're close to the customer, you're close to the media, you're close to other investors they might connect you to. The other answer might be you, in the Bay Area, you won't be able to build the same, like it's really expensive to build a team. So you might be able to build like a really great fast team here they wouldn't be able to do there. So I think the answer to it is, what is the fastest way to get you to the metric you're looking for? If your metric is user growth or your metric is client, I think the question back to your question is, first, what are the top 3 metrics for your great product that you want to do? And the second is, what is the fastest way for you to do that? If you decide to come to the Bay Area, like at 500 Startups, we have the Accelerator that you can stay for 4 months, and that's already sort of like soft landing, easy way for you to get in. And that's just sort of like a easy play sort of route to do it. But I don't think there's a one thing that will tell you like you have to go to Bay Area to become successful, because I think great founders, it's in really like everywhere.
Great. So that was the last question. Thank you very much for coming up here and actually speaking to all of us. Learned a ton. So please give a big applause.
Thank you.
Thank you very much.